Let's talk to David Paul. He's the Managing Director for Vectorvest UK. David, Happy New Year.
Happy New Year to you, Miss. Good morning.
Let's go through a whole raft of slides this morning. The headline today, Value Momentum Investing. Let's go into the second slide just to add to that. The fundamental position of a share, value and safety. The technical position of a share, the technical position of the overall market. What does that mean?
Well, it's these are the three legs of the Vectorvest stool, in fact. We integrate the fundamental position of a share, and by fundamentals, my definition of fundamental analysis is it's a search for the true value of a share. So we look at the past, we project the future, and calculate a value for every share in the London stock market every single evening. And as a default, we favour shares that are trading below their valuation for obvious reasons.
Yep.
So the first leg of the stool is fundamentals. So we want shares that are undervalued, shares that are growing their earnings strongly and safely, that are rising. Now, the second leg of the stool is the technical position of the share. And by technical analysis, my definition is the study of trends and turning points. So I'm looking for a share that's going the right way, okay, that's trending up the page. And then at the moment, the most important thing is the technical position of the overall market. That's the third leg of the stool. And we've got lots and lots of shares on the London market with great fundamentals. We've got lots of shares that are trending reasonably, but the technical position of the overall market since the 5th of October last year has been the wrong way up, has been trending down rather than up.
Right.
So waiting for that to turn. So by putting the three legs together, we can simply push up the probability of making a good decision and mitigating against disasters.
Okay, well, let's go on to the next slide because that just highlights the composite index, okay, in terms of your market timing. So your longer term timing is basically still saying stay away, but short term it's
turned up over the last 3 days. So the most aggressive traders, spread bettors in particular, could be dipping their toes in on the long side. The long-term trend is down. The short-term trend has been up for the last 2 or 3 days. And in the next slide, the situation pretty much the same in the US,
right?
Where the short-term trend up for the last 3 or 4 days ended up very strongly on Friday on that magnificent jobs report.
Yep.
But the longer-term trend down since the 5th of October, and we've been telling everybody to be very careful about any new longs since the 5th of October last year.
Okay. So if we go into the next slide, that just gives us the longer term picture, doesn't it?
That's the longer term picture.
That actually doesn't look very good to me.
No, the momentum on the downside is very strong, that's for sure. And
right.
It would surprise me to see a V bottom here, it really would. So even under the most positive circumstances, if we were to get a bounce now that could easily last 3 to 5 weeks, then I think we're going to see another push down towards those lows again.
But when you in terms of your market timing for the longer term analysis, okay, is this purely price, or is this price and time that's going to generate the buy signal?
It looks at three things, Mus. It looks at one, the price. It looks at the momentum of the price.
Yep.
And it looks at the breadth of the market. Now, every day Vectorvest assigns a buy, sell, or a hold to every share in the market. And every day we calculate the number of shares on a buy recommendation divided by the number of shares on a sell recommendation. So our market timing model, a very important part of that market timing model is market breadth. So a market rising on 2 or 3 shares on very, very poor breadth, in fact, will not register very well on that market timing signal. So before we would get a long-term turn up, the breadth of the market needs to improve significantly from what it is at the moment.
Understand. Okay, well, let's go into a few individual stocks. Let's kick off with the first one, Anglo. There's been quite sort of favourable market commentary about this stock. Is this how you? What are you looking at this?
Just looking at Vectorvest purely, the price itself is trending strongly. Has been for the last couple of years now since the low. The green thick line above the price is our valuation, and as we can see, the price is below the value, which is good, and in the window below the price, the blue line study is in fact earnings per share, and earnings per share growing quite strongly. That's the engine that's driving the share price. Now, technically, it's in fact been consolidating within what technicians refer to as a symmetrical triangle for a little while, and it's broken out of that symmetrical triangle in the last couple of days. I went back and kissed it, which was always a good sign, and last week charted a hammer candle. I've been holding the share for quite a while now, but I would expect that share to push up towards £20, not overnight. There's a deal there. The chap at Vedansha is after control of the share. So there is a deal there. But that looks quite good, and that's my single biggest position at the moment is in Anglo.
Okay, let's move on to the next one. Pearson's, again, they had a good year last year, cost cutting, etc., etc. Is this still on a buy?
Well, a really good turnaround situation, and certainly it came to my notice over the last, since in October, when the general market was falling very strongly, old Pearson was going the other way, and a market that's a share that's rising and a general market that's falling always alerts. We have a search that finds those. So the only worrying thing is that the valuation and the price are pretty much the same at the moment. So
right.
I'm holding it. It's also quite a big position of mine. I'm holding it, but I'm wary at the moment. Earnings per share is looking quite good. It can certainly shoot above the valuation, but when the price and the value come together, it's a warning signal. So
understood. Okay, let's move on to the next one. Plus 500. A clear two-way market in this stock. I think the shorts are 10 or 11%.
that's correct, yes, that's correct.
Undervalued?
Well, yes, the green, as you can see, that green line above the price, saying that our value is significantly above where it's trading. In the rout in October, November, it came back to that long-term support line. Earnings per share is growing very strongly indeed, and I expect, and Vectorvest expects a very good set of books in a couple of weeks' time. It paid a cracking dividend along the way, and I'm holding the share. I got stopped out of the share on a trailing stop loss as it pulled back, and I didn't personally take the dividend. Many of our members of our user group held it through that, and they're very pleased with themselves with a big fat dividend out of that.
Right.
But yes, I've been using Vectorvest now for the last 8 or 9 years. I trust the numbers implicitly, and we offer everybody a 30-day trial of Vectorvest so they can get themselves to the same place. Okay.
Understood. Okay, well, let's move on to an oil stock.
Serica.
Serica.
I've been holding now for quite a while. They took a bit of a hit because of Trump's sanctions on Iran, but that seems to have worked itself out, and share is moving up the page quite strongly, significantly undervalued on Vectorvest, and earnings per share growing very strongly. I would expect that to push up very strongly over the next 6 months or so.
Understood. Let's go on to FairFX.
FairFX, again, pulled back a little bit in the rout, but it pulled back to that long-term support line, and very importantly, it is undervalued, growing earnings very strongly indeed. I thought maybe Zach would be here, so I put the stochastic on there just to please the dear boy, and the stochastic showing a very strong reverse divergence.
Yeah, we like that.
Last week's candle, it actually went down, and some very, very capable guy managed to get it at a confluence of that trend line, an old high, and a 62% Fibonacci. All came in at the 1 point. X marks the spot, and there was some very, very capable people who had their orders there, and it gapped down to the orders. Somebody panicked, and they got out at the bid, and the market went to the orders, and then it reversed very, very quickly on reasonable volume and charted a hammer candle right at the turnaround. So to me, the technical evidence and the fundamental evidence looks wonderful in that share. The only thing that's a little suspect is the overall market. When all three things come together, the fundamentals, the technicals of the share, and the technicals of the overall market, then the hit rate goes up, And the trick of the exercise, if there is a trick, Mus, is to sit on your hands and do nothing.
That's the most difficult game
waiting
in
for
the world.
all the boxes. Yeah, doing nothing is much more difficult than it would seem, that's for sure.
Okay, well, let's wrap up with the last stock, Dart.
I'm not an owner of Dart as yet. It's the only one of the shares that I've talked about this morning that I haven't bought into as yet. But again, it pulled back to long-term support in the rout. Stochastics in the right place. Earnings per share is rising strongly, and it's significantly undervalued. I would like to see it confirm a little bit more, and the general market starting to move up a little bit more strongly before getting involved. But I do like the share.
Okay, let's wrap up with the last slide, important numbers, etc., etc. David, as always, is available, david.paul@vectorvest.com. Right, we've run out of time. Happy New Year.
Happy New Year
let's
to
see
you.
if this market turns to the bull.
Thank you, Mus. Thanks. Appreciate it.